and gentlemen, good day and welcome to the Welspun Speciality Solutions Limited Q4 and FY2024 earnings conference call hosted by Welspun Speciality Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. I now hand the conference over to Mr. Tushar from Welspun Securities Limited. Thank you and over to you, sir.
Hi, thank you so much. On behalf of Welspun Securities, I welcome you all to the Q4 and FY24 conference call of Welspun Speciality Solutions Limited. With this, I now hand over the call to Mr. Salil Pava for his opening remarks. Thank you, and over to you, sir.
Thank you, Tushar, and good morning to all of you, and welcome to the Q4 and FY24 results earnings call for Welspun Speciality Solutions Limited. I welcome all of you to the company's Q4 and FY24 results earnings call. Along with me, we have with us today Mr. Anuj Burakia, who is the Chief Executive Officer and Whole-Time Director. I have Mr. Brijveer Singh, the Chief Financial Officer of WSSL, and Gautam Chakrabarti, who heads Investor Relations for Welspun Corp Limited. We hope you have had a chance to review the investor presentation that we filed with exchanges on April 26th. During today's discussions, we may be making references to the presentation and the numbers which have already been shared. Would request all of you to please take a moment to review the safe harbor statement in the presentation. As usual, we will start today's discussion with opening remarks by our leadership team. Post that, we will open the floor for your questions. After the call, if you have any further queries that still remain unanswered, please feel free to reach out to any one of us. With this, I would now hand over the floor to Anuj, Chief Executive Officer and Whole-Time Director. Over to you, Anuj.
Thank you, Salil. Good morning, everyone. I'm pleased to welcome you all to the Quarter 4 and Financial Year 24 earnings call of Welspun Speciality Solutions Limited. I'd like to start today's discussion highlighting some global macroeconomic aspects. Global economy continues to face multidimensional challenges, including geopolitical events in certain parts of the globe. Situation has led to interest rate hikes in order to counter inflationary trends, limited new asset creation, and high logistics cost, etc. This resulted into limiting of overall economic activity and thus limiting growth. Central banks have exhibited great resilience and continue to take the measures necessary to optimize the balance of growth and inflation. IMF, in its latest World Economic Outlook of April 2024, has estimated overall global growth of about 3.2% for the year 2023 and has projected continuation of growth at similar pace during 2024 and 2025 as well. Despite the global scenario, India continues to maintain its position as the fastest growing major economy in the world. IMF has revised India growth projection for 24 upwards to 6.8% and pegged for 2025 at 6.5%. The Reserve Bank of India, however, expects an average growth rate of 8% registered between 21 to 24 can sustain owing to underlying strong fundamentals. RBI's assumptions are based on government's focus on building world-class infrastructure, strong ecosystem for high-end manufacturing industry, skilled workforce, and leadership position in services, which RBI considers as strong factors and strength to generate opportunities over the next few decades. Talking about our markets, as I highlighted, export markets are a bit slow and cautious for understandable reasons. The Red Sea crisis is yet to be resolved further affecting the shipment time and logistics costs as well. The positive aspect is our customers continue to support us with regular business owing to strong relationship and serviceability. So to say, remaining warm and prepared for better volumes and value, soon we see market scenario turning better. As highlighted during our previous Q3 call, I would like to reiterate that we continue to receive encouraging product acceptance in terms of wide grade and size ranges, leading to adding new customers and enhancing business with existing customers. During financial year 24, the company added 45 new customers to its list. I can confidently say that the company is gradually strengthening its position as one of the key players in niche stainless and nickel product segment. The company will continue to focus on geography and territory expansion during coming years as well. While export markets are of great essence for business, let me reaffirm our sharp focus on domestic market as well. Robust trust and budget allocation for infra projects and key sectors like power gen, energy, defense, space, etc., which are some of the prime play arenas for our products, reinforced with Make in India policy, will very strongly benefit our company and also the domestic industry at large. We can clearly see superlative opportunities for the company going forward. Let me now take you through some key highlights of the operational and financial results for the financial year 2024. During financial year 24, SS Steel product sales volume rose by more than 130% year-on-year to about 15,900 tons. Similarly, pipes and tubes sales volume rose by about 18% to 4,800 tons. Stable order book throughout the year. The order book at the end of the year stood at over 4,100 tons, valued at about 166 crores. Total income of financial year 24 increased by 66% year-on-year to rupees 718 crores, and EBITDA more than doubled year-on-year to 77 crores. During Q4 financial year 24, total income stood at about 156 crores and EBITDA stood at about 17 crores. Considering the profit earned during the year and expected future profitability, following the prudence and relevant accounting standards, the company has recognized additional deferred tax asset of rupees 33.9 crores during Q4. Accordingly, profit after tax for financial year 24 stood at around rupees 63 crores against loss of about rupees 14 crores during financial year 23. Financial year 24 return on capital employed stood at about 19% compared to less than 1% during the last year. I am happy to emphasize that by pursuing a well-defined business transformation strategy, Welspun Speciality could achieve a complete turnaround during financial year 24, witnessing first year of consistent profitability. As a continuing endeavor, company remained highly focused on research and product development. Many high value grades got developed and delivered both domestic and export markets during financial year 24, including the likes of 904L, 30432, Alloy 800, Alloy 625, ultra low cobalt steel for nuclear power, seamless hollow bars, Welsonic 50, etc., etc. Thus laying a strong foundation for future volume and profitability growth of the company. I am happy to inform that Welspun Speciality now stands qualified by BHEL and NTPC for manufacturing and supply of supercritical boiler tubes in stainless steel grades S30432 in an integrated manner, that is from steel making to final tubes. This is a significant qualification, a true import substitution by the said PSUs, and will pave way for entry of the company in this attractive business segment. Our focus on all the three aspects of ESG remains intact. From zero renewable energy until last year, financial year 23, company sourced about 30% total electricity from renewable sources during financial year 24 and endeavor to increase this further in future. The company achieved zero water discharge and are committed to zero waste to landfill in our manufacturing facility. As we move forward, I can clearly see the company gradually firming up its position based on strategy and the strong foundation created during financial year 24. So with this, I would request the moderator to open the floor for questions and answers.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. First question comes from Pradeep Rawat from Yogya Capital. Please go ahead.
Hi, am I audible?
Yes, Mr. Pradeep. Morning.
Thank you for the opportunity, first of all. And my first question is regarding the seamless pipe division. Do we sell both high pressure tubes or as well as specialized tubes?
So on the seamless pipe, we employ the superior hot extrusion method of making seamless pipes, and which is the ultimate process of production, and that's why we produce all kinds, including high pressure and all kind of critical tubes. In fact, we have supplied during one of the quarters in last year a tube project in export of very critical grade and which was tested at very, very high pressure of some 16,000 psi or something. Yeah.
Okay. So can you give the breakout of the end market that you serve in the seamless division?
It's really difficult to give the breakup of the end market, but few of the sectors that that I spoke about, these are the major sectors, and the distribution will always keep on varying depending on which sector has how much volumes to offer. So it's widely spread out, I would say, right from energy in various forms like nuclear and oil and gas, and then fertilizer, and then shipping and defense, space, standard schedule pipes for chemical industry, and for the hygiene industry like food and dairy and pharmaceutical. So it's quite widespread out.
Okay. So my second question is regarding the demand outlook that you foresee for the seamless tube market.
So demand outlook, Mr. Pradeep, we are very bullish on the demand side of seamless pipes and tubes. And in that, let me also say that this bullishness is also coming out of the Indian domestic demand, which is really robust at this point in time and is expected to remain so. The energy sector, wherein a huge amount of power projects have already been brought on stream by various agencies, including the NTPC and the state power utilities, we see a huge demand coming in seamless pipes and tubes in the country.
Yeah, okay. That's all from my side. Thank you.
Thank you so much.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Saket Kapoor from Kapoor & Co. Please go ahead.
Yeah, namaskar, sir, and thank you for this opportunity. Firstly, sir, yes. Sir, firstly, if you could give the timeline for the execution of our order book. the closing order book, what is the executable period?
So, generally, Mr. Saket, the orders are, basis the customer requirements and also what we execute is not always out of the order book that, we had 1 month back. So it is always a mix of the order book, which is carried and also, orders which are booked in the current period. So, some projects, for example, if you book an order, maybe for a delivery in 6 months, some could be for a delivery in 8 months and some could be for a delivery in 30 days.
Correct.
So it's always like that. And I think generally, as we are progressing, our order book consistency is about 2 to 3 months, and which I am sure with time will, increase from here.
So on the base of the sales volume or the tonnage we did for last year, what kind of growth can we anticipate on a ballpark number, just on the volume front, in terms of the bid pipeline and also the current execution cycle?
I would think it, I would definitely expect something like a 20 to 30%, overall growth for us during this year, and that is what definitely is being there on our target.
And what is our current utilization level, sir?
Our current utilization level is definitely low. So increasing the capacity utilization is core to our business strategy. Like financial year 24, I would say the steel utilization was about 30%, around that, which is quite low, and therefore there is a definitive headroom to grow. And similarly on the pipe, the utilization remained around 65-70%. So there also we definitely have a headroom to grow.
Okay. And what should be the likelihood in terms of utilization levels for this year, in terms of this 25% volume growth which we are penciling in for the year? What should be the utilization level, average utilization levels for us?
I think, Saviji, the overall 20 to 30% growth, what is being envisaged in this year is, basis the average utilization improvement and, mix of, let's say, pricing, products and so many things. So I think it will not be really prudent to say that, precisely this much utilization will increase in steel or pipe. So let's say on overall we are looking at 20 to 30%, growth on our revenue.
And sir, small point on the...
I'm sorry to interrupt you, sir.
Ma'am, I'll join the queue.
Yes, sir, please.
I'll do that. Please give me an opportunity again.
Sure, sir. Thank you. Next question comes from Nirav Shah from GC Holdings. Please go ahead.
Yeah, good morning, sir, and thanks for the opportunity.
Good morning, Nirav.
A few questions. So firstly, if you can just share the production numbers for bars and pipes. Production numbers, not the sales number. We give the sales numbers in our presentation. But what were they for 24 financial year?
So production volume for financial year 24 in case of bars was about 25,000 tons. And in case of pipe, it was about 4,750 or something like 4,800 tons.
Okay.
And quarter 4, if I round off, so pipe about 1,350 tons and, steel about 6,000 tons.
Okay. And we added 45 customers. So of this, how much were added on the exports market?
I would not have that right away, but I can say that, generally our mix is about 50-50 or 60-40. So
but,
I would assume something like...
Yeah. So we've been saying that the export market, particularly the European market, is seeing a lot of pricing pressure. I mean,
Yeah.
What are the catalysts that you would monitor which would signal that we are towards the end of the pricing pressure? And how much did we export, just specifically in terms of growth, export volumes grew in entire FY24?
So in terms of percentage, Nirav, there, in fact, we were only able to maintain the proportion, and if you really see, financial year 24 is the first year of real activity for WSSL also. So it will not be really, I would say, prudent to really compare with the past periods as the activity level was very, very low. This year had remained quarter on quarter, if we see, quite flattish in nature, while the markets were not doing well for understandable reasons, the war going on in neighborhood and, with kind of energy crisis they had during the initial quarters. Now, having said that, we still are very optimistic and bullish on our export markets for three reasons. One is, as a company, we can't really do much about geopolitical events or, overall economic performance of EU or, any of these countries. But our strength lies in, the range that we offer, the kind of grades and products that we offer, and our serviceability and the customer relationship. So for us, until now, we have, very well protected our, business with all of our customers and increasing those. And as the time improves, we are very sure that we are, completely prepared for further jump in our volumes and our cooperation with, these countries.
Got it. And lastly, on profitability front, that would be much better in the export market compared to domestic, or both of them are largely on par?
Not necessarily, because it depends. Our products are such that we work on normal profitability products, and some are very high profitability products. And all the sectors exist in India as well as, in the export markets. It depends, what kind of product are you selling. So even some of the domestic sales could be very high profitability, items, and could, exports also could be like normal profitability. So we really cannot say that export is very profitable and domestic is not, or vice versa.
Got it. Great. So, and our sustenance, the maintenance capex will be in the region of 10 odd crores for 25?
Yeah, you're right. So yes, while we need to remain updated with the time, and we do some maintenance, technology upgradation, and things like that. So this year also we are envisaging something like 10-15 crores of maintenance capex.
Got it. Great, sir. Great. Thanks, sir, and I will be back on the queue if I have more questions. All the best.
Okay. Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Asim Bade from DAM Capital Advisors. Please go ahead.
Hi, morning. Thank you for the opportunity. So I had a question on the method of production for seamless pipes. So you mentioned that you use hot extrusion. The other way is to make it via hot piercing. So can you just contrast the two methodologies, cost of production, capex, and is the return ratio similar for both processes, or is it higher for hot extrusion?
So let me put it this way, Asimji. So there is a big spectrum of stainless steel products, right? It includes pipes, tubes, high pressure tubes, and then it's and then when you combine it with various grades, then probably what we will get is like hundreds of products coming out. Now, when it comes to very high let's say high grade items, like starting from duplex and above and nickel alloys and all, they cannot be produced by piercing at all. So on that complete range, the only route that's possible is hot extrusion route. And as far as the medium and low value items are concerned, grades are concerned, there also some of the size combinations can only be produced on extrusion and cannot be done on piercing. So in nutshell, I can say that anything and everything is possible on extrusion press, whereas piercing can only do some portion. And another, if I have to add to it, is that portion is mostly on the commodity side of seamless pipes and tubes, and not the specialty.
Okay, so hot extrusion will produce everything, but hot piercing will not. That's the key takeaway, right?
Yes, you can say that. That's one of the factors. Yeah.
So tell me one thing. the market that you just called commoditized on the side of hot piercing, does that even interest you to look at, maybe since the target customer would be the same, even the product may be different, would you be, open to consider exploring the hot piercing route because you serve the purpose of the customer of certain products and it comes as a cost-effective way in terms of production, you can sell it cheaper, but increase your addressable market or maybe wallet share at existing customer. Is that a thought that you would have considered?
I think it's too early to really think on those lines because first of all, we have our own capacity which still has a lot of headroom. And, our first focus is to grow within that. And while we have a lot of scope to grow on value added and, niche products, I think first the value growth and within the volume that we can grow within our own installed capacity is the first priority before we really look at, going into the next volumetric growth by making investments into a new mill or something like that. So that's not really a focus for us at this point in time, Singhji.
Sure, sir. So last question. You mentioned the production volume for pipe was 4,800 metric tons for the year. What would be the rough utilization as a percentage?
About
of the existing capacity?
About 60-65%. Yeah.
Okay, got it. Thank you very much.
Yeah. Thank you.
Thank you. Next question comes from Rahil Shah from Crown Capital. Please go ahead.
Yes, hi sir, good morning. Am I audible?
Yeah, morning, Mr. Rahil.
Okay, yes, hi. So firstly, you mentioned this overall growth you're expecting 20 to 30% FY25. Now, what can we expect in terms of margins, EBITDA margins going ahead? So if we look at the last year, in June quarter, first quarter, you did double-digit 12% margins. And then from there on, it kind of dropped to single digits. So what led to those high margins in first quarter? And so going ahead, quarter-on-quarter basis, can we again get back to those double digits? What will lead to those if it does?
Very difficult question, Rahilji, but I can only probably respond to it directionally. So, there are two aspects that lead to, final EBITDA margins. One is how the external environment is, and second is your own, company's own mix of products. So in both these aspects, I can tell you that as far as, the aspects which are internal to the, company is concerned, our mix of products keep on enriching, right? We are getting into wider range, wider value, and, wider spectrum. So on that front, we are very clear and, we have a clear strategy in place. But on the external environment, I would put it this way that it is for the second reason that, we could protect our margins and our profitability. Otherwise, the environment outside in last 2 quarters specifically had been really challenging. So we will grow basis our strength of R&D, product development, and the range that we offer. And I would not be surprised, to be back to, better margins and, double-digit margins in times to come.
Mm-hmm. Okay. So, other than external environment, you're completely sure about the range you are offering. Definitely has good margins to offer, but you still have a lot of it depends on the external environment. That's what you're saying.
Yeah, that's right.
Okay. And then getting back to the revenue overall growth you're expecting. So, what gives you the confidence? Because given the order book, 166 crores, which was a month back you mentioned, and then you keep adding orders. So what is the pace at which you foresee to add orders? How has it been? So how is the market right now? And so what will lead to such a revenue growth which you're envisaging?
So, Rahilji, market, I would say in export is flattish. So growth for us will come by way of let's say increasing of business with existing customers, first of all, which have already started showing signs, and let's say when we are in market, we know what's happening. and also where a lot of developments that have been done and validation supplies made during last year will start converting into regular business. See, this is a very typical nature in these let's say these kind of products, that any customer that you make would always start small, with validation supplies, and which is then followed with testing and application, everything, and then after full satisfaction only the real business starts. So whatever was done in the last year will start yielding more business for us. And second is, as I was mentioning, this year particularly, we are very, very bullish on domestic market as well, especially in case of pipes. So it is a mix of many factors, our own capability improvements internally, what we have done in terms of size and grades. So when we look at all these factors, coming together, so this 20 to 30%, our expectation of growth is coming out from that.
All right. And lastly, you've seen a good turnaround in 24. You have posted a profit for the whole year, including all the quarters as well. So now we can expect that to continue as well?
Well, I'm definitely with you on that. And, I don't see any doubt why the company would not deliver profits.
Mm-hmm. Okay. I'll get back into you. Thank you and all the best.
Thanks. Thank you.
Thank you. Next question comes from Radha Agarwala from B&K Securities. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, wanted to understand that out of the 18,000 metric ton capacity that we have for pipes, so how much do we sell as hot finish pipes, and how much for cold finish, and what would be the margin difference between the two?
So, first is, just a second. It is 10K, right? So, first is, if we look at the overall process, there are many steps involved in producing pipe, and they are all very critical and very sophisticated. So, first of all, the capacity that we can talk about, if we do only the sweet spot product, is about 10,000 tons, not 18. But when you really look at the practical utilizable capacity when you are doing high value products and all, is further less. And that is how, we were saying at about 4,800 tons of business, the utilization is about 60-65%. So I would start from there. And then your question was regarding the margin. So I think,
yes.
The pipe is very less. I would not have that number in front of me, but would not be a high percentage. Because any, alloy, nickel alloy or, duplexes and those kind of grades do require, cold process, either by the nature of the product or as a requirement by the customer. And that is what also adds value, to the product overall. But having said that, we do some amount of, hot pipes as well. But I think from the top of my head, I can say that will not be more than maybe 15-20%.
Okay, so mostly it would be cold finish.
Mostly it is cold finish, cold processed. And sometimes multi-stage of cold processing when it comes to, smaller tubes of very high pressure definition.
And so margin difference between hot finish, cold finish, what would be the general difference in margin?
A nickel product, hot finish, will fetch much better margins than, a low grade cold finish product. So, there is no correlation if you ask me. As I was explaining in one of the earlier questions, that really doesn't determine that, hot is always lower. You can say that, but when we sell such a range of different products, it's really, difficult to pinpoint that only cold finish will give better margins and hot finish will not, and vice versa.
Okay, sir. So secondly, some of the players in India are currently forward integrating into stainless steel billets, etc. So how difficult would it be for players like this to further forward integrate into SS pipes? Like, what would be the key hurdles or difficulties will they face apart from getting the certifications?
Okay. You see, we are, at least I am not aware of new billet capacities coming, any big billet capacities coming, because most of these stainless steel producers who are melting and producing steel, according to me, they remain the same. Maybe restart of one or two facilities which used to be there and were not operating for couple of years, and then they are getting restarted. But new capacities, according to us, are not getting created here on the billet. As far as entering into seamless segment is concerned, I can only tell you that it's technology-wise an entry barrier, except getting into a small size piercing mill, which is these days we see a lot of trend coming in India. People are bringing it. But when it comes to value product, which is high value and which is going for very critical applications, that product is not going to work. And I'm not really sure as to how many people are or how many companies are contemplating it. But that's a serious entry barrier to get into a product like this.
All right, sir. So lastly, by when do we plan to fully utilize the existing capacities? And also, if we are running the pipes at 65% utilization, so are we expecting a capex in another year and a half or so? And if that happens, would it be greenfield or brownfield?
Okay, so one is volumetric expansion is definitely not there on the cards because we have enough capacities, first of all, and the top priority is to utilize those capacities. In pipe, we are confident that over next 2 years we should be able to start hitting the utilization almost to what we have. Steel also, a significant capacity utilization is definitely envisaged in 2 years' time. The capex will not be really, it's not contemplated at this point in time except for maintenance and sustenance capex of 10-15 crores a year. That is definitely will be required for keeping up with the new technology and developments that are taking place around.
All right, sir. Sir, you didn't mention about whether the next requirement of capex would be greenfield or brownfield. Whenever we require it.
Well, that's not been thought. You see, at the most, if we go forward and look at doing some kind of a capex, will only go into enriching the product portfolio, not the volume, right? So, by that standard, I don't see any greenfield kind of capex which is there on the agenda or on the cards for sure.
Okay, sir. Thank you and all the best.
Yeah, thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Tushar Pendarkar from Welspun Securities Limited. Please go ahead.
Thank you, sir. Thanks for the opportunity. Sir, I have a couple of questions. First one is related to tax. We are currently not paying tax, and we reported a tax gain in this quarter. So how much MAT credit do we have to utilize, and how many years it will take to utilize, and what would be the first tax rate which we will?
Tushar, what are carried forward losses and unabsorbed depreciation as were reported in the last year balance sheet was about 670 crores. For 31st March 24, I would expect it to be around 600 crores, but, after the year adjustments and all, but that will be published along with the schedules as we go on, I think, towards the end of, sometime in May. So, but it is expected to be about 600 crores. It's really very difficult to say as to how many years it will take to really absorb. If you ask me, I would desire to do it right away, but it's really difficult to to give a projection around that.
Okay.
But what has been recognized on as at the end of the year, is let's say since there is a sustained profitability and which is expected to continue, then applying prudence and also the relevant accounting standards, what worked out is about 33.9 crores of deferred tax asset, and that has been recognized.
Mr. Tushar, this is Brijveer Singh here. Just want to add that the company has moved to new regime of taxation. So considering that, the MAT credit concept will not be applicable in this.
Okay. And sir, the second question is related to SSR. How much steady state typical EBITDA per ton we earn on SSR?
I think that probably would not be really relevant because quarter on quarter it really swings. One is due to the movement of raw material and sales prices, which are not always aligned, and second is the product mix itself. So I think we'll have to look at it in a holistic manner, and very difficult to pinpoint that this is a kind of yeah.
Okay. Thank you, sir. Thanks. That's all from my side.
Thank you.
Thanks.
Next question comes from Meeraj Shah from Aryan Capital. Please go ahead.
Hi, good morning, sir. Thank you for the opportunity.
Yeah, good morning.
Just a couple of questions, sir. First is, what would be our current mix of domestic versus export sales for FY24 full year? The reason why I want to understand this is that I believe we feel the export segment market is a bit weak, while domestic we believe it is strengthening. But it's kind of conflicting with our earlier commentaries that when we were expecting export market, especially Europe, to be extremely strong. So I want to understand if we are moving our focus towards domestic, or are we going to still maintain our focus in exports as well going ahead?
So, there are two things. I think we are mixing two things. So I'll just like to clarify. As far as our focus is concerned, every single market is absolutely focused for us. And company has deployed all necessary resources and bandwidth to see that, we extract the best business out of any market that we are in. Now, the second aspect is, while, we have focus, what is likely, the likely situation, in immediate future that, we expect. So, as stated in earlier commentaries, now also we are very clear that for us, European market, not just European market, in fact, we have started working on the other markets already in last year, and that should also start showing results in current and future years. Export is not going to lose any significance in the business strategy. But realistically speaking, the way things are going in the external environment, this year we are seeing that activity on export might be little cautioned or lower. As far as financial year 24 is concerned, our export remained at around 40% of the total sales, and which during quarter 4 further came down below 30%. So here we are prepared for, let's say, business both in domestic as well as export markets, and as the environment goes, we are going to address it accordingly.
Understood, sir. So for the current year, would it be fair to assume that domestic is looking more bullish than exports, and our domestic push would be higher, contribution would be higher?
See, our push is not going to change for anything. I mean, we will have equal amount of push. In fact, we need to also increase our capacity utilization. So maybe the increase might come more from domestic than from export, the incremental volumes. But, our focus is equal, whether it is domestic or export. On bars, of course, the overall consumption in domestic market is lower, and, you find major markets outside of India. And that is how, on the bar side, the export will be major focus, which was earlier the case and now also the case. So we can say that our annual proportion of export, we would expect to maintain at similar levels also during FY25.
Okay, it would remain more or less in the same range, FY25. Okay, and my second question, sir. The scrap that we procure for raw material, is it domestically procured or do we import it?
It's both. We buy domestic as well as we buy imports. There is no, fixed policy around that. Depends on the pricing terms and, from time to time, availability from various origins. Yes.
Right. So, what would be the proportion between domestic and imported for FY24?
Again, changes quarter on quarter because, depends on exchange rate, availability, and so many things. But I think our import this year, let's say financial year 24, was less. It was more from domestic market. I would say about 30-35% might have come imports and the balance from domestic. And which also is the case currently also that seems to be the case.
Okay, currently, post FY24. And what kind of pricing difference do we see between domestic and import?
That's not fixed, but obviously you see the market corrects itself, equilibrium will always be there. So, the difference is never very huge. It is in the range of like 2% to 4%. But which is important, as a business, we need to protect our cost. And that is how, the evaluation is done basis the landed cost for the company. And, and also the deliveries. And the decisions are taken accordingly.
Understood. 2 to 4% domestic is cheaper, right?
No. I'm saying, when domestic is cheaper or export is cheaper, the spread between the two pricing cannot be more than, anything between maybe 1 to 4%. Let's say not even 2 to 4%. So it is not always. So when we are importing, which means that, the import is cheaper than domestic at times. So the situation keeps on changing. At this point in time, if you ask me today, we see domestic prices are little economical and about 2% cheaper than imports.
Understood. Perfect. Thank you so much for answering questions, sir. Just one last thing. 20 to 30% growth that you said for guidance, is it value growth or volume growth?
I think it's both.
Okay, perfect. Okay. Thank you so much, sir. And all the best for the future.
Thank you. Thanks, Neeraj.
Thank you. Next question comes from Sailesh Raja from B&K Securities. Please go ahead.
Thanks for the opportunity, sir. Sir, you mentioned we have replaced high-value imports product with NTPC and other state-run utility companies. So how much overall import is still happening across all the user industries put together? So in which sector more imports are happening? What is our scope to win the business?
So there we particularly meant, about the boiler tubing. And stainless steel boiler tubing up until now primarily was a matter of import. And because one, the capability was not there in the country and, that was a major reason. And the quantities that we see now and the erstwhile quantities was not that this high. It is now we are seeing that 100 plus gigawatt of new power capacity is envisaged to be put over next few years, and that is how we are seeing flurry of demand that is coming into stainless steel boiler tubing, and which is up until now it was all getting imported, which is now, like for example, Welspun Speciality is approved for these critical tubes, and similarly couple of other companies will also get approvals. But there is enough business, and that is how we are also saying that we are very bullish, not just for this segment but also the other segments like space and nuclear power, which are showing very strong signs of growth in next 2 to 3 years.
Okay. In terms of volume, can you share for next 2-3 years what is the opportunity that we can replace?
Well, it's really difficult to say exactly in 1 year, 2 years time what will come, but it may be in hundred thousands of tons coming over next few years, like in next 7 to 8 years.
Okay. Also, we are talking about increasing the size range of the product. So what is the overall left out opportunity for us today? What is the size range that we have and how much we are planning to increase? If we increase the size range, then what is the potential opportunity for us? And how do you see next 2-3 years incremental volumes because of increasing the size range?
I think that's second, third level kind of detailing, Shailesh, but what I can tell you is that, you see, we can go on increasing the sizes only up to the extent, the assets can accommodate. Okay. Now, earlier we were doing mostly up to 8-inch bars on the steel plant, and beyond that we were either getting forged or, doing from various different methods. As we speak, we have already expanded that capacity to about 12-inch, which will be done, completely in-house, and all the tooling and that capability is already built, and which is also giving us an edge, when it comes to to our customers, because this size range is not very common. Not many mills offer these sizes, and mostly the other sources for these kind of sizes are either few European mills or the Japanese mills. So that's the reason we are saying that there is a certain range which is unique to Welspun Speciality, and that is where our let's say value also is coming from.
Okay. So last time you discussed on this Turkey market, you said it is one of the key markets for us, and Turkey is seeing a lot of turbulence in the economy. So how do you see the near-term opportunity in this country? What is the opportunity here? And which sector?
So last year, Turkey volume-wise is a big market. There is no doubt about it. Last whole year, Turkey remained disturbed because of inflation, and you see the interest rates in Turkey went as high as 40-45%. I mean, unheard of. That's something very wrong with the country. But last, I would say 2-3 months, we are seeing that new normal has been found. We are seeing flurry of inquiries. In fact, we've been able to book the new orders, and if it remains in this same state or improve from here, I think Turkey will be back. Though in our scheme of things for this year, we are not keeping very high hopes on Turkey, but we are keeping a cautious eye and not lose an opportunity when it really comes. But in longer term, if you ask me, that's a very, very important market in terms of consumption base, and very suitable for the kind of range that we produce and what they need.
Okay. So what is the size of this market?
Well, only stainless steel let's say, the market which is relevant for us as a company, what we produce. I'm not going into the smaller size. I'm not going into the bigger size, and more or less what we can supply. I think Turkey imports close to 50 to 60,000 tons a year.
Okay. Okay, sir. Thank you, sir.
Yeah, thank you.
Thank you. Due to time constraint, this will be the last question for the day. Follow-up question from Asim Bade from DAM Capital. Please go ahead, sir.
Yeah, sorry, my questions have been answered. Thank you.
Okay.
Thank you, sir. There are no further questions. Ladies and gentlemen, I would now like to hand over the floor to the management for closing comments.
We look forward. Thank you so much. We look forward to improve our performance and market positioning by way of increasing penetration in niche and value-added segments and products. We believe this will also help insulating the business risks during challenging external environment. We are confident that performance of the company will sustain and further improve with unstinted focus on penetrating into newer markets and customer acquisition, developing and delivering new value-added and critical products, strategic cooperation and securing approvals and accreditations, nurturing innovation and digitization of processes which are part of company's growth strategy. I hope we have been able to address your queries. For any further questions, please feel free to get in touch with our investor relations desk. Once again, I thank you for attending today's discussion and look forward to meeting you again soon. Thank you very much.
Thank you, members of the management. Ladies and gentlemen, on behalf of Welspun Securities, this concludes your conference. Thank you for joining us, and you may now disconnect your lines.